It's Glitchard, and this will be a video chart on the S&P 500. I think I've done this one at some point in time, but it has been a while, so I wanted to get this one back up here. I know the last overall market chart I did was, I believe, the Nasdaq, and then before that I've been doing the Dow Jones quite a bit. But wanted to get the S&P up here because I know some people follow this one. It's one of the main markets, obviously, so it's worth keeping track of as much as possible. And right now, all the markets are pretty much doing the same thing. So this is pretty interchangeable with the Dow Jones or Nasdaq or whatever uh, want to throw it up against. But I wanted to get things updated just for everybody that is following kind of the overall markets. First thing that we all know about is just this right here. Overall, since early March, just one solid uptrend. So I don't mean to state the obvious, but just remember that's the context we're in right now. It's just a big bounce, and this chart is going to be focused more on a little bit of a shorter term type view, and kind of what we do and don't want to see in terms of support levels and resistance levels. The first thing that I'm actually kind of just curious of is where this takes us. Alright, so if we use these two lines, you can see that basically we hovered right around this area, and we still are. I guess the question becomes, are we going to separate ourselves more from this trend line, or is it going to knock us down? Trend lines, just like support and resistance levels, are not exact prices. They are ranges, and this is just a great example of a range. You can see that you get some closes above it, then you get some below, above, below, and so forth. So it's picture this as a web, and as you can see, the price is definitely caught in this trend line's web. So the first and key question right now is what's going to go on from this trend line here. Are we going to separate, like I said, or going to get it knocked down from it? Let's first just say we get knocked down from it. What sorts of levels do we want to see hold if we do get knocked down? The first level that I'm hoping we can hold on any sort of knockdown is this level right in here, right around, we'll call it the 980 range. So let me get this changed to green. And actually let me get this changed to red too, because right now this is our resistance trend line, and we're getting caught up in this little zone right here. And just so you can see, this line was formed by connecting this high with these two, and then you can see it did a good job here. And then once again, stuck up in this zone right now. The other thing with this 980 is if you look where the middle Bollinger Band is, or the 20-day simple moving average, that's also valued right now at 981, so basically the same thing. But let's say this one fails. Does that mean that the market's going to crash and fall apart again? No, there's still other key support levels below us. And the next one that I'm going to be looking at and considering to be more substantial in terms of what I want to see hold is back in this area over here. For simplicity's sake, we'll call it about 950. So we have 980 up here as kind of as the ideal area, but if that one doesn't hold, then we have 950, and I'm going to make this one a little bit thicker to kind of represent that it carries more importance with me in terms of what I'd want to see hold. Just like up here, we have the 20-day simple moving average. For this one, we have the 50-day simple moving average swooping up on us. So that's one thing to keep in mind too, is if this fails, then the 50-day will need to hold too. But if that doesn't happen, then that's where things could get pretty ugly, because if you're looking at the chart, the next support level is not really till down here a little bit. So that was clearly quite a drop. So if this trend line does end up knocking us down, because remember, we could just separate ourselves from it and keep on going up, but if we do get knocked down, these are the two levels that ideally I want to see us hold strong. Now for resistance, what I'm going to have to do for this is just go to the weekly chart, since the daily I'm going to have to make too small. But looking here on the weekly chart, our next key resistance area is going to be right up here, which is what we hit back in, let's see, October of 08, so it's been quite a while. This level is at right around 1045, maybe we'll just say 1050. So besides this resistance trend line that we're trying to deal with right now, if you can get through that, then we have 1050 up here on the weekly chart, which is the next key resistance level, and if that one fails, then I'm sure I'll be back to update where the next resistance levels are at. But for the time being, I don't want to get ahead of ourselves. Let's just take one step at a time and see what happens. Back to the daily. One thing to note is, uh, like I said, we're hanging around this trend line, but at the same time, we just got a bearish crossover on the MACD. The money flow, or excuse me, not the money flow, the RSI is sloping downwards, so we're losing some strength here. Despite the sideways price action, we are sloping down on the RSI. Got a bearish MACD crossover, so don't be surprised to see if we end up getting knocked down by this trend line and it pulls back a little bit on us, because the indicators are suggesting that RSI running out of strength here, MACD losing our momentum. So keep that in mind. And once again, just because you pull back doesn't mean that the whole market's going to crash. That's why we have these support levels to keep your eyes on. But if we do get a pullback, let's just keep our fingers crossed that this 950 area holds on anything dramatic. But for the time being, we'll see what happens. Don't freak out if it does happen. But these indicators are saying that it's a real possibility that we may be getting kind of slapped back down for a little bit at least. So if you have any other questions on the S&P 500, please shoot me a message. On another note, if you go down and look in the link, you can see something about a free ebook, and if you go there, you'll be taking a bullmarketnewsletter.net. Sign up for that newsletter, and you'll be on my newsletter, and you'll get a free ebook, which goes over some tips and tricks and so forth. And then you also will be alerted to other bullish chart setups, get some articles, some fundamental plays, and some trading ideas too that we've been having some good success on. So I'd encourage you to check that out and sign up. It's all free, so no strings attached. You got nothing to lose. So hopefully we can separate ourselves from this trend line here. If not, second best situation is these support lines hold, but we will see. Thank you for listening.